Welcome back, traders and investors. We have a special guest on the line, Reggie Middleton. He's a financial analyst and founder and editor of Boom Bus Blog. Reggie, how you doing on this Thursday morning?
I am fine.
Okay, thanks a lot for coming on the show. Let's get started here. And one of the topics that we're going to discuss with you is the true value of Bitcoin. It kind of had its run in the media, and it had a big move up, and now you don't hear about it. Let's talk about the value and why it's kind of hidden in the media.
Well, the before we go into the true value of Bitcoin, I'd like to put everybody on the same plane as to what Bitcoin is. So the 10-second spiel, 15-second spiel on Bitcoin is that it is a digital currency that has its own transmission system, its own rails, so it can actually send itself. And the most important portion is that it is actually programmable, just like computer code. So you could take Bitcoin, you could program it to do anything that you could conceptualize, basically. And the currency obeys this program because it uses a central ledger called the blockchain that is secured by a very high level of cryptography. You can uh, make unbreakable, unbreachable agreements or contracts. That is the true value of Bitcoin. Very rarely, if ever, do you hear that in the media. Usually, the media focuses on the price, the volatility of the price, or some body who broke the law using Bitcoin. But if you take a realistic perspective, I know the Silk Road was very popular in the media because it was used to trade drugs. Well, the currency that is the number one vehicle for drug trade is the U.S. dollar, and practically every other crime. The reason why this happens, of course, is because it's more spectacular and it probably garners more eyeballs. But if people understood what Bitcoin is truly capable of, that would be much, much more of a newsworthy item. What Bitcoin is now is what the internet was in 1993.
Wow.
And of course, in 1993, a lot of people thought the internet was either for nerds or for doing child pornography, etc. You fast forward, 15, 20 years into the future, 25 years, and the internet is so interwoven into global economic commerce. Global commerce in the economy that it cannot be removed without collapsing it. And I foresee Bitcoin doing the same thing, or at least the Bitcoin technology doing the same thing, but at an accelerated pace.
Okay, so it sounds like you're pretty bullish on the Bitcoin. Or are you investing in it at all? Is this something that you track? What if so? If you're investing it, what levels are you looking for? What are the key levels, and what do you think its true potential is?
Okay. Well, I dove headfirst into Bitcoin. I've actually created a startup which I put all my resources in. The startup is called Veritasium, and the product is Dogecoin. The investment is in the Bitcoin infrastructure, the blockchain, the technology that allows you to program it. I own very, very little actual Bitcoins themselves, the actual currency or the account value that is called currency. The reason is that's where the value is. The value is in the technology of Bitcoin that allows you to program money to create unbreakable contracts and to create a monetary system that can actually emulate business processes. Our first product, UltraCoin, mimics the business functions of investment banks, brokerages, and exchanges. So on a peer-to-peer basis, that means you download the wallet software. You can trade over 75,000 tickers in any major asset class, stocks, bonds, metals, commodities, currencies, you name it, futures, options. You could trade it peer-to-peer, which means I would trade from my desktop or the cell phone directly to you, bypass all exchanges, bypass all banks, all brokerages. You could do it on a counterparty risk-free and credit risk-free basis because it's going through the blockchain, which means there's nobody to fail. If my company were to go down, you still get your money back. You can't have a Lehman Brothers or a Bear Stearns or a Mount Gox or Countrywide or anything else. And You can do it on a very, very unique form. It works in a swap system. So instead of, say, buying Apple stock, you buy exposure to Apple stock and you can trade that exposure in the same transaction for Google. So you could go long Apple, short Google in one transaction, or go short Google, long Apple. You could get even more creative. Basically, because the transaction is made for programmable money, the only limit is your imagination. All this is done at about one fifth or one sixth the price that a bank or brokerage will offer.
Do
It
you?
sounds like something very interesting for me, but of course I'm biased. But compare
Yeah.
this to the conventional way of doing things, and this is just the first product, and now you can see how this new technology goes so far beyond the price of Bitcoin going from 200 to 1,000, etc.
Are you doing that? Are you doing that right now with the
Right.
75,000 tickers? You're doing that right now?
Yeah, but right now, all the listeners can go to the webpage at ultra-coin.com, go to the download link, download the quick start guide and the software, and trade to your heart's content.
In this,
Also of interest is the fact that you can do micropayments. So you could trade as little as 20 cents per trade. You can buy exposure to Apple stock for 20 cents or $2 million or anywhere in between.
and this is okay with the financial regulators.
Uh, to my knowledge, to my understanding, that's what it is. What the product is a Bitcoin wallet. Um, we don't touch fiat currency, dollars at all. We don't exchange fiat currency. We don't even touch or exchange the actual stocks. What we're doing is allowing you to trade exposure to various asset classes, etc., with other users. Remember, it's peer to peer, so you're not going through us. You're not relying on our financial stability, our balance sheet, our integrity. You're dealing directly with other users.
And how do you know the financial standing of the other users? Like, let's say I sell an S&P future to you, and it goes my way. How do I know that you have the financial backing and wherewithal to make my contract good?
Everybody puts the principal for the deal up front and the collateral, and it's put up front before the deal is entered. It's using something called smart contracts. If you remember in my initial explanation, uh, I said you have unbreakable contracts or promises. So you form a contract, it's swap exposure with me, okay, for let's say $1,000 worth of Apple. I put $1,000 up, you put $1,000 up. We both put collateral up as well. It's locked into the blockchain, and once we agree on the terms, duration, etc., it's locked in. Neither of us can break the contract, whether we want it to or not, until the expiry of the contract where the funds are returned.
Okay, and how? I mean, if you're not financially responsible for the contract, what are your enforcement capabilities? Like, let's say somehow I manage to put up, give you fake information, and I do a large trade in Apple. It goes against me. Someone wants to cash out. I don't have the money, or it's just a fraud. What are your enforcement capabilities?
I'm glad you asked that question. This is the magic of Bitcoin. This is why Bitcoin is the technology of the future. It's enforced by simple math. As long as 2 plus 2 continues to equal 4, you cannot break the contract. When we enter in a contract, you put your $1,000 in principal up. You put, let's say, $1,000 in collateral up. You put it up to the blockchain, and it's locked in. And I do the same. We agree on a contract. Once the
Okay.
contract is it commences, it's enforced by math. So as long as 2 plus 2 equals 4, you cannot back out of the deal. The only way out is to reach expiry, and you get your profits and no losses back. And the collateral is adjustable. Okay, but right now we have it defaulted at 100%. So that means that you will get every single cent of whatever profit or loss comes to you up until 199% of the deal. So Apple will have to skyrocket, say 400% or 200%, in order for you not to get the full profit. After you exhaust the collateral and principal, the contract automatically unwinds. And both sides agree on a collateral amount before they enter the contract.
So, what do you think the implications for your product are for the exchanges?
Well, there are two ways you could do it. You want to discuss things such as exchanges or intermediaries. that currently stand in between two transactors of value. There are two ways this can go. The first way, they can go the way of a record company. If you remember when there was another disruptive technology or a technology that allowed disruption, such as the MP3 technology, and the business models that came after it, such as iTunes or Napster or Pirate Bay. The industry players were fearful of it, and they didn't embrace it. So the MPAA, the Music Industry uh, Association, okay, decided to take the legal and litigious route, right, instead of embracing the technology. They were able to shut Napster down. The reason is because Napster was a centralized technology where they had a server and everything went back and forth from server like a conventional company. So that was taken down and it was replaced by a peer-to-peer technology, BitTorrent, Pirate Bay. That was also outlawed by the courts. But after being outlawed, if I'm not mistaken, BitTorrent and Pirate Bay are responsible for about 42% of download traffic in the U.S. and that is worldwide. And that's after being outlawed, 15 years ago. Even after that, you had Apple, which came in with a legal business model, iTunes. The music industry embraced iTunes, right, and embraced the business model without engaging in technology itself, and their profits were approximately halved over the last 10 years, 12 years. And those profits went from the music industry to iTunes. So that's scenario A. Scenario B is they embrace the technology and they work directly with a company such as myself. And to my understanding, I'm the only entity out that has this technology up and running at this level. And we have patent applications behind it. If they embrace it, exchanges can actually work with us and they can work with our API and we simply take the conventional centralized exchange where everybody sends their assets to a allegedly trusted party and lose control of those assets and possession of those assets until they get them back. And they use this new paradigm where the exchange simply allows entities to find each other and entities continuously have control and possession of their assets until they give them up to the blockchain, which is beholden to nobody. So it can't be hacked. It can't be taken over by regulatory authorities, and it cannot be a victim of malfeasance or fraudulent activity. That's the wave of the future. And as for the players and the actors who are currently in the industry, you have basically one or two ways to go. Embrace technology in a business model or fight it and get run over by it.
Ah, very interesting. So, what's your take? I mean, all the implications here with your product, what you're trying to achieve, Bitcoin, and then Apple comes out with Apple Pay. What is that? Any kind of a threat to your your company or your exchange, or why did they do that? Do you think it's going to help the company? What's your outlook on Apple?
Well, my outlook on Apple as a mobile technology company is bearish. Apple is in a situation where many mature technology companies are, such as Microsoft, etc., where they have graduated from a growth company into a mature cash cow, and they have lost whatever oomph they had to create new product lines that were interesting. If you take a look at their hardware, their cell phones, they charge premium prices. They have steadfast loyal brand, but the capability of the hardware, the quality of hardware is vastly inferior to the competition. Basically, all the Android devices. If you take a look at the Samsung Galaxy Note 4 and compare it from a specification perspective to the top of the line iPhone 6 Plus, and it's like apples and oranges. It's like comparing Mercedes-Benz to a Volkswagen, despite the fact that Volkswagen has Mercedes-Benz pricing. Now, Apple can get away with that and sell high premium products at high volume, the best of both worlds. But over time, their market share has eroded significantly, and so has their margin, because the competition is selling a superior product at an increasingly smaller price. And so, from a hardware perspective, they're in trouble. They're not going out of business, but those wide 70% margins are a thing of the past. And That has been shown over the last several quarters. That is the reason why Apple is trying to transform its business model when they came up with Apple Pay. Contrary to their mobile handset business, where I'm bearish on into the trend, I'm moderately bullish on Apple Pay because it allows them to basically iTunes the financial payments in the banking industry. Just
Wow.
like they iTunes the record industry, they are going to iTunes the banking industry.
Wow.
They are charging 15 basis points extra. So the banks and the payment processors have to pay an extra 15 basis points on top of what they already do just to get access to a system that they could have easily built themselves. But they didn't. Apple is using 3-year-old technology for Apple Pay. So the NFC chip that they're implementing has been in other phones such as the Samsung Galaxy series for at least 3 years, since 2010, 2011. Google Wallet's been out for at least 2 years. Now, being bullish on Apple, bullish on Apple because of the iTunification probability of the financial industry. Okay, but Apple is doing it on a very, very rudimentary basis. They're basically saying you could take this digital currency, and Bitcoin is not the only digital currency. All major currencies are now digital, like U.S. dollars. If you think about your net worth, how much money do you have in your pocket in terms of dollars versus money you have via debit cards, credit cards, PayPal, etc. So we all use digital currency. But the digital currency that the vast majority of the world uses is dumb fiat digital currency. So it's currency that you can only send or receive. You can't do anything else with it. That's what Apple's basing its entire business model around. And it makes sense to them because that's what everybody else uses. Now enter UltraCoin, the very taste of UltraCoin product that we're building. We can build intelligent digital currency. So we can have a situation where you have a vendor who wishes to make a large purchase overseas from someone in China, manufacturing in China. They don't know this company. They don't know the reputation. They can make the purchase. They could send its money over, but they could program the money into a small contract. And that small contract says, unless you deliver 8,000 widgets with a purple hue by September 24th, you won't get paid. So you can give the money, right? The vendor can receive the money, but the vendor cannot pay the money, cannot spend the money until that contract is mutually satisfied and both sides agree upon it. It's self-escrowing, so there's a event or a dispute. Both sides won't be able to spend it, and they have to agree upon it. The ability to make smart contracts embedded within the currency itself is so far beyond Apple Pay as to compare, kindergarten with a PhD.
Okay, we've had Reggie Middleton on. He's a financial analyst and founder and editor of the Boom Bust blog, giving us an interesting take on Bitcoin, Apple Pay, also his new app that is utilizing the Bitcoin model. Reggie, a lot of great information there. Thanks for coming on, and we certainly hope to have you on again.
Well, it's very welcome, and I look forward to coming on again.
Okay, thank you, Reggie.